read an article about the big, beautiful tax bill that said it utilized a different type of accounting. I was incredulous. How was that possible? There are already many different types of accounting, 20 or more depending on how you account. After some investigation, it turned out the writer was being facetious, but it did prompt me to do this review of the 20 different types of accounting. You may or may not think all of these deserve their own breakout. I'd love to hear your thoughts on that issue in the comments when I'm done. Make sure you stick around until the end when we talk about the newest area that's still kind of evolving. But for now, let's get started. Accounting type number 1, cash accounting. This is when both the revenue and expenses are accounted for when they are received or paid out. You might know this better as your check register. While it is simple to use and implement, there are some serious drawbacks to it, and it is not GAAP, G-A-A-P, generally accepted accounting principles compliant, as most of the rest of the methods that we're going to discuss are. Accounting type number 2, accrual accounting. Some might say that the remaining types of the accounting that we're going to discuss should all be lumped under this heading, and clearly I'm not going to do that. But do keep in mind that most of the remaining will meet these requirements or these criteria. Accrual accounting is based on the matching principle of GAAP, which states that all revenues and expenses must be reported in the same period and matched so that the profits and losses for the periods can be determined. It also gives a more accurate picture of the organization's financial well-being. Accounting type number 3. Financial accounting is used for the preparation of financial statements like the income statement, balance sheet, and statement of cash flow. It is accrual accounting and conforms to GAAP. It is the process of recording, summarizing, and reporting a company's financial transactions and performances. It focuses on providing financial information to external stakeholders like investors, creditors, bankers, and regulatory bodies. Accounting type number 4, managerial accounting. This is customized to meet the internal needs of an organization, analyzing costs and revenue. It looks closely at performance metrics relevant to the organization with an eye towards planning and evaluating business operations. Each organization will handle this in the way that suits them best. Technically, it does not have to conform to GAAP, as it is usually used only for internal purposes. Accounting type number 5, cost accounting. This refers to the reporting and analysis of an organization's cost structure. It has the goal of determining the efficiency of the organization's production process. It can further be broken down into 4 types, and these include standard costing, marginal costing, activity-based costing, and lean costing. And I'm going to do you a favor. We're not going to go into each of them today. We've got enough on our plate as it is. Accounting type number 6, inventory accounting. This refers to the tasks needed to process, value, record, and manage the organization's inventory so that you can accurately reflect its financial position. There are a number of methods used to calculate this value, which we'll investigate at a later date. We're just going to give you a high-level overview today. These include FIFO, first in, first out, LIFO, last in, first out, weighted average cost, which when you use can also make a critical difference in your financial statements. You will also sometimes hear reference to HIFO, especially in relation to cryptocurrency transactions. This stands for highest in, first out. Accounting type number 7. This is one we're all painfully familiar with, tax accounting. This is the accounting that's done for tax purposes. It focuses on tax and is governed by a complex set of rules put forth by the Internal Revenue Service in its Internal Revenue Code, sometimes referred to as the tax code. Its purpose is to determine how much a taxpayer, which could be you and me as individuals or a business entity, owes in taxes when they follow all the provisions and rules laid out in the tax code. Frequently, accountants who focus on this area do nothing else. They also help their clients minimize their tax liability through the use of deductions that qualify under the tax code and reduce their taxable income as well. And they also work on tax planning to help structure transactions, etc., to minimize future tax liabilities. Accounting type number 8, public accounting. This refers to the work done public accounting firms do for public, private, and not-for-profit organizations as well as individual. This work includes tax prep, auditing, bookkeeping, and the preparation of financial statements. Some public accounting firms also offer consulting services, but at least in theory, that work is separate from the auditing work, which we're going to discuss later on, a little bit further on in this conversation today. Although there are numerous accounting firms, the industry leaders today are known as the Big Four. Prior to the Enron scandal, it was the Big Eight, but now we're down to 4. Public accountants are required to be independent and are regulated by the Public Company Accounting Oversight Board in the U.S. Accounting type number 9, forensic accounting. This is the one with the most mystery on it, if you will. And this focuses on legal inquiries into fraud, embezzlement, and financial disputes. These accountants are often called in to recreate or reconstruct incomplete financial records or fraudulent financial records. Those in forensic accounting roles serve as auditors or consultants, and they're hired as needed by banks, law enforcement agencies, attorneys, and other business. Forensic accountants also play a role in preventing fraud by helping organizations design and implement internal controls. And just FYI, if you're looking for an interesting career choice, the FBI hires forensic accountants. Just saying. Okay, accounting type number 10, we've already referred to this or alluded to it, and that is auditing, which this can be, as I hope you're aware, either internal or external. Many large organizations will have a staff of internal auditors whose job it is to establish internal accounting policies and procedures with the goal of improving risk management, government, and process control operations. And if you've watched some of my other videos about the accounts payable process, you'll have heard me tell folks that if they're having management go along with a recommendation that they're making that would strengthen internal controls, you've heard me say that maybe get your internal auditors involved. The internal auditors will also help you correct flawed processes, identify and mitigate instances of fraud, waste, abuse, and prevent future cases of mismanagement of funds prior to the external auditors coming in. External auditing, on the other hand, is the process through which an external, independent, certified public accountant, which we call a CPA in the U.S., reviews the company's accounting records and prepares a detailed report of the finding. Auditors may be called to verify a business compliance with internal or regulatory standards. They may investigate suspicious financial activity, analyze the accuracy of financial statements, or review tax returns. And of course, when the auditors come in, you always want them to certify the financial records and the financial documents that you're putting out. Accounting type number 11, fiduciary accounting. This is the management of accounts and activities related to the administration of a business, pensions, trusts, endowments, and investments. Fiduciary responsibility is legal responsibility to act in the best interest of another party and is the foundation of fiduciary accounting. Fiduciary accounting also plays a key role in receivership, which occurs when a bankruptcy or such similar event requires the appointment of a custodian of business assets. You may hear people talk about trustees sometimes in this regard. Accounting type number 12, government accounting, which, as you might imagine, is the specialized field of accounting that focuses on the financial management and reporting of public sector entities, including government, agencies, and institutions. It ensures transparent and accountable use of public funds and adheres to financial regulations and accurate financial reporting. Accounting type number 13. Not-for-profit accounting makes sure that those organizations, not-for-profit organizations, use their resources in line with their charitable missions to maintain to maintain their tax-exempt or not-for-profit status with the IRS. This requires several steps not required of for-profit or government entities, including tracking funding sources, accounting for any restrictions placed on donor contributions, labeling net assets, reporting functional expenses, and disclosing specific details about program services, fundraising, and administrative costs. In a little bit, we're going to talk about fund accounting, which further refines this. And just FYI, for all you folks who are complaining about that they think you're too strict with your requirements for their expense reporting and what they have to turn in and etc., it pales in comparison to what those organizations have to do who get grants from not-for-profit, just an aside. Okay, accounting type number 14, fund accounting, which we've already kind of alluded to. And this is a specialized system for organizing the financial transactions for government and nonprofit entities. Each fund has a separate ledger to track assets, liabilities, equity, revenue, and expenses for a particular program. Financial statements can be run for each fund, making it easy to track how money is spent in accordance with any legal, regulatory, or donor-imposed requirements. Many times when people make a donation, they say, they're giving X dollars and it's to be spent on Y. Government agencies, government entities must follow GASB standards for fund accounting, segregating tax-supported activities. Accounting type number 15, 5, 10, 15. Construction accounting addresses those unique requirements the industry faces for project-based work that may span several accounting periods. This time element can make the revenue recognition and the tax reporting challenging, as expenses may be incurred in one accounting period while the revenue is earned in another. Never mind may, is frequently. Specialized revenue recognition methods, such as the percentage of completed or completed contract method, are prevalent in this type of accounting, as are other unique elements such as progress billing, retainage, specialized reporting, like the work in progress schedule. Accounting type number 16, 5, 10, 15, 16, is governed by FASB and GAAP in the United States. FASB is the Financial Accounting Standards Board, FASB. Pension accounting is the calculation and disclosure of the pensions plan's assets and liabilities in the organization's financial state. Pension accounting requires costs to be recognized using a very specific method to tie the value of the benefit to the employee's time with that organization. It also takes into consideration past and current service costs, the impact of interest, and expected income from plan assets such as investment interest, dividends, and capital gain. It differs significantly depending on whether you have a defined benefit, i.e. a traditional pension plan, or a defined contribution plan, i.e. a 401k. Accounting type number 17, 10, 15, 16, 17, is sustainability accounting, and this is just an emerging form of non-financial accounting. You may have heard of it as referred to as ESG, which is environmental, social, and governance accounting. It measures and reports a company's ESG impact. Sustainability accounting includes metrics such as carbon emissions, water usage, workforce diversity, and board independence. The SEC rules have been finalized, and the ISSB and the EU standards went into effect January 1st, 2024. Also be aware that California has passed rules requiring sustainability disclosures for public and private U.S. companies, and the IFRS Foundation's International Sustainability Standards Board, the ISSB, issued two standards, the IFRS S1 and the IFRS S2, designed to form a global baseline for accountability for sustainability disclosures. Accounting type number 18. Accounting information systems are not really a distinct type of accounting, but stands at the intersection of technology and accounting. It refers to the systems and processes a business uses to collect, store, manage, process, retrieve, and report its financial data. It improves accuracy accuracy and reliability of the data while making it timelier and more accessible to those who need it. Accounting type number 19, international accounting. This is a huge issue, and it addresses the financial reporting and business operations across borders. International financial reporting standards were developed by the International Accounting Standards Board. It is a framework of accounting principles and practices that impact multinational corporations, cross-border transactions, and international financial markets. As you might imagine, it addresses many unique challenges not found in domestic transactions. It is critical to remember that the key focus of international accounting is understanding and reconciling the difference in accounting standards, practices, and regulations of the many various countries. Accounting type number 20, cryptocurrency accounting. This addresses this rather new instrument. The objective is to provide investors and other capital allocators with more decision-useful information that better reflects the underlying economics of crypto assets within the scope of the entity's financial position, while reducing cost and complexity associated with applying costless impairment accounting. Good luck, huh? Further details are included in FASB's Accounting Standard Updates 2023-08, which is Intangibles, Goodwill, and Other Crypto Assets, subtopic 350-60, Accounting for and Disclosure of Crypto Assets. Not exactly easy, huh? Who knew accounting could be broken down into so many different areas? Are you reeling from all this? Could you use a few minutes of fun? Maybe take a little mental break? Click on the link that has appeared on your YouTube screen, as is in the description, for 3 minutes of accounting fun. Enjoy!